Okay, today we are here on the Precious Metals Summit in Zurich 2013, and we have David Baker, one of the keynote speakers beside us, and David is managing partner of the Baker Steel and heading the branch in Sydney, in
yes.
Australia. Yes,
that's correct.
And his company has extensive experience in the management of funds, investing in the natural resources and gold and precious metals. Welcome to Europe, David.
Thank you. It's nice to be here.
It's taking time for us. Please, what does Baker Steel exactly do?
Well, we manage a suite of funds. We're managing about $600 million across the natural resources sector, predominantly in the gold sector, so predominantly in gold mining equities. And we're covering the globe, so we're managing funds for our clients out of Europe and Australia, and we're buying and trading shares around the world, but we're investing to get exposure to natural resources and predominantly gold.
And how is your company involved in the resource branch?
How is it involved in the
resource sector?
Well, we basically we analyse companies, and then we decide basically which are the cheapest companies to buy. So we're looking at fundamental research on the mining companies. But most of our funds at the moment, it's predominantly exposed to gold. So we're looking at the gold equities, and which has been a difficult sector over the last 2 years. It's been a very tough sector.
Okay, that's fine. You are one of the keynote speakers.
Yes.
But what topics you are speaking at this conference?
Well, yesterday my topic was the issues facing the junior mining sector, and then we talked about, we introduced the production-linked dividend model. And so the first part of the conference, because the conference here is generally emerging producers and explorers, and it was some of the issues facing the development of new assets, or new mines. So we discussed that, and then we introduced our strategy, which is the production-linked dividend model. And that model is that investors or shareholders get a fixed percentage of metal production or revenue, and we've got a couple of companies doing this already. So Evolution Mining in Australia pays shareholders 2% of production, or the equivalent, and Mandalay Resources out of Canada pays around 6% of revenue. And we think this is a very good model, because what it does, it links what's in the ground to what shareholders are getting back. And it's a very easy metric to communicate. It's very simple, but it actually conveys a lot of information.
Right.
So a normal mining company might say, well, our dividend policy is 4-5 cents a quarter. And we say, well, what does that mean? You know, it doesn't really convey a lot of information, 4 or 5 cents a quarter. And so what we'd argue, it's better for a mining company to say, actually, we're paying 5% of our gold production. And then that links us, it ties us in with management, and it gives us a direct link to the gold price, gives us a direct link to what's in the ground, and it gives us a direct link to production. So we think it's a very interesting strategy, and I must admit, yesterday after the speech, we had a lot of people come up to me after the conference and say this was very interesting, and they did like it.
It seems it's a strong market, and it's a difficult market at the moment.
It's a very difficult market.
How would you characterize it, the precious metal market at the moment?
Well, it's very depressed. I mean, gold is people don't particularly like gold at the moment, and gold equities people absolutely detest. You know, it's been a tough market in that gold equities over the last 12 years have underperformed gold, and there's been some periods where they've outperformed gold, but more recently they've been underperforming gold, and people are quite disillusioned with the sector. So it's everything's been sold down, and this is where there's a lot of opportunity, but that opportunity is best for a specialised group like ourselves. You know, that's what we do every day. We have a number of analysts sitting in London and myself in Sydney. We travel the world, we look at different opportunities in the mining sector, and we're looking at the best places, the best investments to invest in. So we're very specialised, and this is the skill set that we're offering our clients.
That's right, fine. Yeah, so you have a lot of experiences in this.
Yes.
Do you see any indicators for turning market into positive?
Well, I think that the market at the moment, you know, we've tried, you know, we tested 1180 and we bounced off that, and you know, there's a bit of toing and froing. You know, we've seen that every time that the gold price falls, that the Asians, particularly the Chinese, basically start buying. So there's a bit of a cushion underneath the market. So the selling pressure that's coming from the West is basically being met by buying pressure from the East. So it's an interesting juncture at the moment. In terms of the shares, you know, we've had some fairly big sell-offs earlier this year, but now the value is definitely there in the market. And so what we're seeing is on sell-offs, the sell-offs aren't as big as they were before, and so there's definitely buying coming in. So we sense that the market's bottoming, and there seems to be fairly good support around these levels. Now, is it the bottom? I'd like to say it is, but unfortunately, you know, I don't read tea leaves, and I can't say definitively it's the bottom.
No,
but
nobody can.
I think we're closer to the bottom than the top, and when we look at at the optimistic case that gold does revert back into a rising trend, then we think the pickup in the shares will actually be quite tremendous. So we think the risk reward is very much for the equities, and very much for the upside. So our recommendation is to have some exposure at the moment, particularly because general markets have been doing very well, and the gold has done very, very poorly. So, and they tend to work counter-cyclical. So it's worth definitely to have some exposure to the gold and gold equities as they hedge against the very strong markets that we've seen around.
Okay, thanks very much from your experience. Do you have some advices for our readers, how they could act at this market situation?
Well, our advice is to basically consider a diversified fund, like the funds that we offer, but basically use a specialist investor to basically play this market. It is a very specialised part of the market, and you need to go to a group which has got the skill set to do that, and we've got a long history and a lot of experience in this market, and our track record, despite the volatility, has actually been quite good. So we'd recommend that this is an interesting opportunity, and for clients to basically consider a managed fund to basically play that, and whether they can look at Baker Steel funds, that would be very good as well.
Yeah. Thank you, David. Finally, do you have some special favorites for you?
I have a lot of very special favourites. So some of my some of our biggest positions would be G Resources, which is a Hong Kong listed company, which has a very low cost gold mine, gold and silver mine in Indonesia, and I think that is very, very well priced. So it's not a particularly high risk mine. Its costs are very low. We could argue maybe Indonesia's a bit risky, but they're doing okay. That's they've got a very strong balance sheet, so that would be probably one of my top picks. And the other would be Endeavour, which is listed in both Toronto and Australia, and that's a West African gold producer. And you know, they're going through some very strong growth. And I think that is trading at probably 25 cents in the dollar, so I think that looks very interesting as well. So they'd be two of my other picks. I think that you've got to get the balance between you know, risk and reward in this market. So we're putting in some things into the portfolio which are slightly higher risk, and but you know, you want a core of very good projects and some things which will give you that kicker. I always like to say that it's like the marzipan on the top of the cake.
Okay.
So you want that sweet spot, so when the market recovers, then you'll really get some good performance. So that's how we're structuring.
Thank you very much for some impressive thoughts that you gave to us, and thank you also for the interview.
Thank you, it's my pleasure.
And good luck for the conference.
Thank you very much.
Thank you, David.